Dubai's property market is showing early signs of cooling just weeks into the U.S.-Israeli war in Iran. According to Goldman Sachs estimates, real estate transaction volumes in the UAE fell 37% year-on-year in the first days of March and nearly 49% compared to the previous month. Analysts say this marks one of the sharpest short-term drones in recent periods. The surpassing declines seen during the 2024 floods and earlier regional tensions. While median transacted prices are only down around % year-on-year, the step fall in activity is raising concerns that momentum in Dubai's real estate boom could be slowing. Early signs of pricing pressure are also emerging in the parts of the market. Real estate agents report discounts ranging between 12% and 15% on select properties. And this includes both ready and off-plan units. At the same time, Goldman Sachs estimates that total transaction values so far this month are about 50% lower than February levels. This indicates a sharp pullback in deal-making, even if widespread price collapse is not yet visible. The confront is now being viewed as the biggest stress test for Dubai's property cycle in years. Shares of major developers have fallen more than 20% since the war began. CD analysts warn that the geopolitical risk could slow Dubai's population growth to around 1% this year and potentially trigger a 7 annual decline in property prices in a bearish scenario through 2028. However, market participants say activity has not stopped entirely. Some investors continue to look for discounted opportunities, and select high-value deals are still taking place. Developers argue that long-term demand remains intact even as short-term volatility reshapes sentiment in the market.